Terra Luna is a crypto organization, whatever you want to call them, who runs a stable coin, and they like algorithmically create value for their coin by, I don't really exactly understand it, but somehow you put money into it and it just automatically makes sure that their stable coin is always worth $1. And that's essentially the point of it. There's a bunch of these stable dollars out there, but Terra is one of the newer players in the stable coin game, I guess. But one of the companies is called Tether, and how they do it is supposedly every single dollar that's out there is backed up 1-to-1 with $1. Like they actually have dollars in the bank to back it up. Terra, to help back their stablecoin up, they're actually buying Bitcoin to do that. So they already own like $3 billion in Bitcoin, and they want to own $10 billion worth of Bitcoin over time. The reasoning behind that is their idea is their stablecoin will never fail, because for their stablecoin to fail, that means Bitcoin has to fail. And in their view, if Bitcoin fails, that means basically all cryptos have failed.
Yeah.
Do you buy into that argument at all?
And if it's backed up by Bitcoin, it seems like a decent argument.
Right. Do you think it's, I guess what I'm kind of curious about is, do you think it'd be better to back up every dollar that you have in stable dollars, in actual dollars, like Tether is doing, or you think it's better to back it up by like a hard asset like Bitcoin, or what do you think?
I would say a hard asset like Bitcoin.
So, because yeah, I kind of agree with that, because I mean, it seems like the cost of keeping the stablecoin up, you would, that would certainly. I just don't see how backing it up by dollars would make sense in the long run. This sort of reminds me of like when there used to be gold-backed dollars. It's like they've created a Bitcoin-backed dollar on crypto
Right.
rails, basically.
Yeah, it's the same concept.
It's kind of interesting, but they're not putting all their money that they've got into Bitcoin, but they're doing a good portion of it. Though I guess it kind of helps lend to the narrative. The Bitcoin is basically like the gold of the internet in the cryptocurrency space, because we have another
Yeah.
cryptocurrency who's literally buying Bitcoin to help back up their crypto ideas. You know what
Right.
I mean? So it's like, at least in the digital realm, not necessarily every realm, but the digital realm, it is the gold of that of the cryptocurrency world. So I think it definitely helps that narrative for sure.
Yeah, I agree.
Yeah, I don't know. I just thought it was kind of interesting. This is called the Bitcoin stock to flow model, and it's trended pretty close to it over the past, since inception. And what stock to flow is basically how much stock of Bitcoin does it take to have all, or how okay, so let me back it up. How much how much time would it take for you to create all the Bitcoin that already exists? So right now, which technically never can happen again, because there's 19 million Bitcoin that's been created. There's no way to create 19 million more. There's only 2 million left, but we're at like a 1.5%, like 900 per Bitcoins per day is the current rate of creation. So the stock to flow is super high. It would take a long time to create all the Bitcoins. It would take many years if it would stay at that same inflation rate. Now, at the Bitcoin halving, which is right here, the next one, as you can see, like it'll take even longer because the inflation rate gets cut in half. So the idea is, if you assume the same inflation rate, how long does it take to recreate the stock of the current amount of Bitcoin? Does that make sense?
Yes.
To restock it, essentially. Um, Gold has a high stock to flow with an inflation rate that is very low, the same as Bitcoin. And again, over time, the Bitcoin halvings will increase the stock to flow. What's interesting is this model has followed pretty well. This is the actual price of Bitcoin, and this is the logarithmic trend. and every halving the price goes up because of the fact that the inflation is less and the stock to flow increases. But as you can see, we're like way below the model at this right now. That's what I think is interesting.
Yeah.
So remember in 2017, at that huge price jump, we were actually above the stock to flow model. Then it corrected, and then went back, and then it kind of settled. And then we had the halving, and then boom, it went up. But we haven't really. That's why everybody was saying we're going to 100,000. That's what everybody was saying right around this time, which was like the beginning of 2021, near the end of 2022. They're like, we need to go to 100,000. This only makes sense because it's been following this model pretty closely, but that never happened. So a lot of people are saying right now Bitcoin is very undervalued based on what it did before. However, I don't think you can. This is very much a supply side model. You know what I mean? Like it's not really taking into account the demand.
It looks like it's mainly just been overvalued. Like it hasn't dipped below the line very much.
Yeah, I was noticing that too. That's why a lot of people are saying it's way undervalued right now.
Yeah.
I don't know. Maybe it is, maybe it isn't. But that's why they're predicting by 2026. Some people are saying by 2026 it's going to be $1 million. I don't think demand can keep up. Because you still have to have... and basically the assumption is as long as the demand stays relatively the same, due to the stock to flow model, the price will go up to around these levels. So basically, I think what this suggests is the demand is a lot less right now than it was at this point, or this point. The demand was a lot higher here.
True.
I think that's what it's suggesting. So the adoption rate,
sense.
And it does seem like Bitcoin has been shit on a lot, and the adoption seems to be getting crappier. I don't know. Maybe that means it's the time to buy it.